In that environment, Bitcoin spikes to 500,000, 600,000, $800,000 a coin as a safe haven, as capital flees the collapsing global bond market due to the unwinding of the global Ponzi scheme or carry trade. And we see it every day. You can track it by just looking at the 10-year Japanese government bond to see where we are, how close we are to the tipping point where the entire global economy goes into free fall and Bitcoin spikes toward a billion.
Hey guys, welcome to Everyday Finance. Max Keiser is sounding the alarm on what he sees as a brewing global debt crisis. And he believes Bitcoin will be the ultimate escape valve. In his latest forecast, Keiser explains that massive macroeconomic shifts are on the horizon, with traditional fiat systems teetering under the weight of unsustainable debt. As central banks lose control and inflationary pressures return, he argues that Bitcoin's fixed supply and decentralized design will become increasingly attractive. With financial instability looming, Keiser sees Bitcoin not just as an investment, but as a revolutionary hedge, a financial escape pod that could protect wealth as legacy systems falter. He urges viewers to pay close attention because when the next debt blow-up hits, the window to reposition into Bitcoin might slam shut fast.
And you're saying, what's the risk in these corporate treasury plays, that micro strategy or strategy pioneer? Like, where is that going? And then you're talking about gold confiscation. Like, okay, that's like a separate question. So the first question is that what Saylor identified after he identified the melting ice cube, which was his basic thesis for Bitcoin going back to 2020. He could have bought it back his own stock, or he could have bought gold with all his cash. But he started buying Bitcoin because it was an inflation hedge and it was compounding at a rate that was greater than inflation. And he knew that holding cash was a losing strategy, and just buying back your own stock. I think that he figured there had to be something better than that. Because up until Michael Saylor, pretty much the only thing these companies did to boost their earnings was buying back their own stock. He introduced something new. I mean, this was really a remarkable achievement and milestone in corporate finance. Then the next thing he figured out or implemented was that, look, I've got the ability to sell at the market ATM common stock with very little regulatory hurdles to jump, and immediately buy Bitcoin with that. And my shareholders, they're not going to complain about dilution because ultimately I'm buying Bitcoin, so it's accretion. So dilution equals accretion is something that, again, Saylor kind of, I would say, he maybe didn't invent that idea, but he brought it to a state of something of approaching perfection on the corporate finance side. So now, after tirelessly pitching this idea to companies around the world, you now have the surge of companies doing the Saylor play. So where is that going to go? Well, it works for as long as these companies are accessing cheap money. That means they're taking on debt. I mean, they're putting debt on the balance sheet and they're loading up with Bitcoin. But then you have to say, is this yet another credit cycle? Is it like another dot-com crash in the making? Is it another shitcoin crash? Is it another bond crash like 1993, the stock market crash of 1987, long-term capital management crash? I think that was 95. And I would say, yeah, it's going to be, they're building up a huge amount of unsustainable debt that's going to blow up at some point. I don't see it happening soon, but I believe it will lead to the next cycle's top in Bitcoin will be corporate treasury overindulgence. Number one. Number two, confiscation by the government of Bitcoin. If I were the government, I could do that very easily by seizing Coinbase, which is the custodian for all these companies, or B, seizing Marathon Mining and Riot Mining in Texas, which they have a shitload of Bitcoin and all the mining capacity. That's how I would do it if I were the government. The decentralization means essentially that no single entity has dominion over the network. So Michael Saylor can't change the protocol. He can own 1,000,000 Bitcoin. You could have a few players owning very large positions, and even if they colluded, even if they work together, they're not going to change the protocol. Increasingly outside the realm of possibility because you have game theory, where it's tough to get people to coordinate this type of thing and invalidate their own coins by attacking themselves, a 51% attack. In the case of Bitcoin, there are remedies, but I think ultimately when you discuss every single possibility under the sun that could happen to the protocol in terms of risk, it does come down to one basic idea, which is faith. The Bitcoin protocol gives humanity faith that it will survive. And I think that's its saving grace. There is something to say about the need for our species to hope and have faith that we will rise above this hell of fiat money.
Bitcoin is currently hovering just 8% below its all-time high, yet the futures market is flashing warning signs. Traders are growing cautious with the premium on Bitcoin futures, typically 5% to 15% above spot price, falling below 4% as of June 20th. That drop reflects hesitation and fear that the rally may not be sustainable. Despite massive inflows into spot Bitcoin ETFs, over $5 billion in just 30 days, futures sentiment remains weaker than it was even during the sharp 10% drop in April. The failure to hold $110,000 and the recent dip to $12,400 have clearly shaken trader confidence. Meanwhile, the 25% delta skew in options markets has risen to 5%, signaling growing demand for downside protection. The disconnect is stark. Institutional investors are loading up through ETFs, while retail and leveraged traders are stepping back, waiting for more convincing bullish signals before jumping back in.
Looking at the global financial picture and how Bitcoin gets to 800,000 and above, there is one piece of data that is at the linchpin of the entire global financial system. There's one number that tells you, like an EKG machine, what the health of the global economy is at. Do you know what that number is?
I do not.
It's the rate of interest on the 10-year Japanese bond. And I'll explain why. So, going all the way back to the Reagan era of the 1980s, the world became financialized. The Reagan-Thatcher era of deregulation. And we went from a manufacturing society to one of banks and financiers and structured finance and on corporate balance sheets deriving a large percentage of profits from doing trading activities on Wall Street. So the biggest companies in the world, they make a lot of money just by trading with Wall Street. So a car company will make a lot of money on Wall Street just trading financial instruments. A restaurant company, you become financialized. And the best and the brightest became financiers and quants and hedge fund managers. And that's the era of finance. And what drives finance ultimately is cheap money. How cheaply can I borrow my money to create my structured product, my derivative, that's going to help me put cash to the bottom line of whatever enterprise I'm involved with. And for years, for decades, the cheapest place to get money has been Japan. Because after World War II, they had a very structured pension system that accumulated trillions of yen in a honeypot of cash that was a go-to cheap place for them to get money to fund their economy. They open that up to global financiers who can then borrow in yen, which is like 0.1%, and put that immediately, let's say, into a US dollar equivalent and get 4 or 5% on that money by simply carrying the cash from yen to dollars. It became known as the yen carry trade. So what's been happening in the last 2 years is that the yen carry trade is breaking down and interest rates are going up. So the 10-year treasury in Japan has never been higher. It's like 3.5%. And it's at a precipice now where if it gets much higher, the Japanese economy is going to have to start selling U.S. Treasury bonds to stay solvent, which would create a cascading event I call the bond apocalypse, where the global bond market crashes. And that's a $200 to $300 trillion market, which is one of the biggest markets in the world, second only to the Forex market. In that environment, Bitcoin spikes to $500,000, $600,000, $800,000 a coin as a safe haven, as capital flees the collapsing global bond market due to the unwinding of the global Ponzi scheme or carry trade. And we see it every day. You can track it by just looking at the 10-year Japanese government bond to see where we are, how close we are to the tipping point where the entire global economy goes into free fall and Bitcoin spikes toward $1 billion. Okay, what dies first? Well, you'd have to say confidence or trust dies first.
In the government?
In the market. So markets are run on confidence. People buy a stock today at 20 times projected next year's earnings because they have confidence that NVIDIA is going to make that number. People buy a U.S. Treasury bond at 4 or 5% because they have confidence that the U.S. Treasury can pay that interest in 5 years, 10 years, 20 years. You need confidence to run the capitalist economy. And if that dies, and the next would be the dollar. If confidence, the next to die would be the dollar, the US dollar. If confidence dies in the US and the US dollar, the ability to not be printed to death, which is on the verge of being printed to death, then inflation will spike higher, which kills the bond market. Called the Bitcoin singularity is when we all enter Bitcoin consciousness. And the Bitcoin consciousness is when my Satoshis and your Satoshis can be exchanged between us telepathically. And then all of your Satoshis become my Satoshis, and all of my Satoshis become your Satoshis. And we are in one being of the hive mind. And I can send you Satoshis telepathically. And I can just look at you and just send you 1 million Satoshis. And you can be like, thank you. You can send me 800,000 back. Thank you. And that constant murmuration, like starlings in the sky, flying through the digital space of Bitcoin and perfect money, is when we enter the kingdom of Bitcoin and we become one with Satoshi and we see the face of Satoshi. And then we dissolve as ego-driven monkeys taking acid, and we become pure spirit. I was speaking at the halving party in El Salvador, and a 9-year-old kid came up to me on stage, and with a similar question, like, I'm 9 years old, am I too late for Bitcoin? And I said, after thinking about it for a moment, actually, I'm too early. What I mean by that is, in 20 years' time, when he's 29, he'll be living in a Bitcoin world. And everything that comes with living in a Bitcoin world, I'll be gone. Fear.
Fear?
Fear of everything that we've been talking about. Fear of love. Everything can be divided between fear and love. Those are the two paths, only two paths available to anybody at any moment. Bitcoin is a path to love. Fiat money is a path to fear. Everyone who's against Bitcoin is fearful, full of fear that there will be something will be taken away from them, that they'll lose power, that their understanding of how the world works might get crushed. That has happened many times to people, high-profile economists who fear having their worldview crushed by this new asset class, this new reality, this new state of consciousness, Bitcoin, and they act out. They become vengeful. They become hate-filled. They become nasty, and then they disappear because their view can't survive.
XRP is flashing red flags with massive profit-taking underway. Early investors, those who bought in below 50 cents before the November 2024 rally, are now cashing out at over $2, locking in gains of more than 300%. On-chain data from Blastnode shows roughly $68.5 million in daily sell pressure, echoing the kind of top-heavy behavior that preceded XRP's 2017 crash. Alarmingly, over 70% of XRP's realized market cap has been built since late 2024, meaning most holders are relatively new. Historically, these newer entrants are more prone to panic selling during downturns. If the trend continues, XRP could drop by as much as 35%, potentially falling back to the $1.35 to $1.60 range. There's a slim chance of support at the 50-week EMA, but if that level breaks and no strong buyers step in, XRP might be on track for a steep correction, reminiscent of its post-2017 collapse.